So the average hold period in Texas might only be 3 or so years. And I think that's a bit of a product of the recent market that we've been in, which has been a very hot market. So people were benefited by buying and then quickly appreciating the asset and selling. And I think now that we have had a bit of a reset in the market, I think things are going to be a little bit slow, which is good because that's what real estate is really all about.
What would you say the number one secret that you guys have found to building wealth in Texas?
Well, something I find interesting about Texas, and one of the things that actually initially attracted us to the market, is not only its size, but also the transaction activity. So what you have is you have big markets: Austin, San Antonio, Dallas, Houston. These are major markets, which is great for us because that means they're big sandboxes to play in. We can look at a lot of opportunities, we can pass on a lot of opportunities, and only invest in the best deals for us. But the other interesting thing, which is somewhat unique to Texas, is it's a bit of a trading market. So there are long-term owners, but there's a bit of a mentality in Texas where people are buying and selling real estate, specifically multifamily, which is our space. So the average hold period in Texas might only be 3 or so years. And I think that's a bit of a product of the recent market that we've been in, which has been a very hot market. So people were benefited by buying and then quickly appreciating the asset and selling. And I think now that we have had a bit of a reset in the market, I think things are going to be a little bit slow, which is good because that's what real estate is really all about. And so that's my insight, which is a little bit of a contrarian thing, is even though that Texas is a bit of a trading market and people have made a lot of money buying and selling quickly, the real money, in my opinion, is made on a long-term basis. It's thinking long-term, it's investing long-term, because not only is that the best way to build and compound wealth on a tax advantage basis, the best, but it also reduces your risk the most, because the longer your horizon, the more you're able to ride out downturns, the less risk there is in terms of getting caught in a flip with bad timing and actually losing capital. So that is my, I'd say, biggest Texas multifamily insight.
I think that's a great one, and it makes a lot of sense. And so it sounds like, Texas, it's a big enough market to scale in the sense that it's a major market, but also the more of a mentality of trading and moving. So you get to see a lot of deals. So you can say yes to the ones that make sense, no to the ones that don't, versus some of the dinosaur markets where some of these ultra wealthy folks, like maybe New York or California, they never sell, right? They just like collectors of monopoly, like Boardwalk Park Place, and they're just going to hold, right? And they're going to pass it down. And so Texas gives you that good opportunity of mix, where it's a big enough market and it's a scalable market, meaning there's going to be enough deals and transactions to see and do. I think number one. And then number two, you said just the sheer size of Texas. It's just massive, right? You have Austin, you have Dallas, you have Houston as the major metros, and the Fort Worth there with Dallas as well.